Hi, this is James Shrug with Westpac London's end of day report for Friday, November the 11th. Well, today was a risk-on day, particularly in Europe, where the political developments that we saw gave markets a little bit of confidence that maybe the worst of all possible outcomes for the European economy and for the euro might be avoided. This is probably just a temporary respite. There are still huge difficulties that European governments are going to have to confront in coming days, weeks and months. But for today at least, things just looked a little bit less dire. Basically what happened was we saw in Italy the Senate approved the range of austerity measures that's been designed to help Italy avoid the need for a bailout like we saw with Portugal, Ireland and Greece. The process now is that it needs to get lower house approval, which it should do over the weekend, and that then paves the way for Prime Minister Berlusconi to step down in line with his commitment to do so. What we're expecting is that like a technocrat government will be formed, led by Mario Monti. He's a former EU commissioner and quite well respected. And in Italy, actually, technocrat governments have actually done quite well back in the 90s, sorting out labour relations and other issues that popularly elected governments, prime ministers, simply couldn't achieve. In Greece, we've seen Lucas Papademos, the former ECB vice president and Harvard academic. He was sworn in as Prime Minister in Greece. So Prime Minister in the new interim government that is going to put in place the austerity measures ahead of elections, probably in middle of February. Now, both these guys know what to do. They know what measures they need to implement. That's not going to be the difficult part. The difficult part is going to be actually achieving the revenue and objectives and the spending cut objectives such that they meet their budget deficit targets. That's going to be really tough in an environment where, on our view, Greece and Italy in particular are going to be really receding in terms of economic output. Even the EU Commission acknowledges that next year Greece is going to contract for the fourth year running. Unemployment over the last 12 months has risen from 12% to 18% in Greece. That's a whole bunch of people that won't be paying tax. And our concern is that with the budget targets not fully taking account of the rapidly deteriorating economic circumstances, we're going to see either the bailout won't be sufficient, have to be renegotiated yet again, bring with it risk of more market turmoil, probably just months down the track. And it's a similar story in Italy. Italy, of course, doesn't have a bailout negotiated for it yet. Italy is seen as too big to bail out. But the economy, on the EU Commission's own forecasts, will have a very mild recession around the turn of the year. On our view, it's actually going to be quite deeper than that, with the EU Commission assuming things like the current turmoil in markets actually abates progressively through 2012. That's a very optimistic technical assumption that we just think won't be achieved. So the growth outlook's going to be a lot worse, and that's going to make it a lot tougher to actually achieve the budget targets. Nevertheless, today saw markets rally quite sharply. Equity markets are up strongly. Italian bond yields, 10-year bond yields fell down to about 6.4%, more than 1% lower than their peak earlier this week. And as I said, equity markets certainly did much better. Oh, that's right. And the other thing I wanted to mention was the French-German Bund spread came in again as well. German Bunds rose in yield. French Bunds, French OATs, OATSs, they actually fell in yield. So even the French concerns of earlier this week have abated somewhat. So that's the main news today, really. We had a rise in consumer sentiment in the month of November, reported for the US as well. So that was another decent piece of economic news there. In fact, the highest reading for that measure from the University of Michigan since June. So recent US data has been positive, and that continued today. So given all that, equity markets have done pretty well today. It's heading up towards 4 o'clock in London. We've got the Dow up 272 points, or 2.3%. It's at 12,166. And in Europe, the London market's up 1.6%. The French market's up 2.5%. German market's up 3%. And the Italian market's up 3.4% today. In commodity markets, commodity prices are generally doing pretty well. Copper prices are up 1.2%. Gold's up 0.8% at $1,774 an ounce. Oil prices at $98.47 a barrel. They're up about 0.75%. The big losers today actually are the 19 commodities I've got here is actually sugar. Sugar's down 2% today. Aussie dollar, it's at 1.025 against the US dollar at the moment. Its low point today was 1.01, so we've seen a 1.5% appreciation in the Aussie dollar on this renewed appetite for risk, or on this diminished concern about the impact that a collapsing Europe might have on the global economy. That's about it. Okay, I'll be back next week. We're a very busy data week in the US, and of course there'll be lots more to report on Europe. Interesting to see too if Berlusconi angles to become the president of Italy. My understanding is that he might be effectively immune from prosecution in that role, so there might be some appeal for him in terms of becoming president, if only because it makes it easier for him not to have to face up to those court proceedings. I hope that's not libelous or slanderous because I said it. Anyway, it's a widespread view out in the market anyway. I'll leave it on that note.